Hi everyone, welcome to another episode of Money Matters. And today it's a very interesting episode for investors, mainly individual investors like you and me, who invest in the stock market. Now, if you're not an investor in the Indian stock market, you need a demat account. Uh, Also, you of course you'll be having a savings account, and from the savings account you can put some sort of money into your demat account, and that's how you sort of invest in equities and shares in the Indian stock market. Now, what is the IPO? IPO is nothing but an initial public offering where any company which wants to get listed on the stock exchange, they will create an IPO, and so people sort of apply for the IPO from their demat accounts. So you need to have a demat account to sort of apply for the IPO. Now, once you, it's like there'll be a fixed amount of shares which is made public, and that depends on each company as to how much percentage of share they are willing to sell to the public audience. Now, so there's a chance like the shares are limited by, of course, like it'll be say 10-15%, which is available for purchase in the open market. Now, it is based on your luck that if it gets oversubscribed, means that many people will be sort of bidding for this IPO based on the reputation of that particular company or brand. So it's not always you initially like one lot of IPOs, like say 14,000 rupees, and it's like you sort of bid for the IPO, your money gets blocked, and after the share or the share of that particular company goes public, which means it's listed in the stock exchange in BSE and NSE. Then if you don't get that lot, then the money is sort of it's sort of refunded back to your bank account or savings bank account, and or they will remove that hold. uh, your money is put on hold, and that will be sort of removed. So this is just to give you a very basic idea as to what is IPO, what is demat account. So a demat account is something which you need to in order to for you to invest in any sort of financial instrument like equity, shares, bonds, futures and options, and other instruments. So without further news, like like going to interesting piece of news is that now LIC is, as you know, Life Insurance Corporation of India. Now LIC is coming with one of the biggest IPO. What is IPO? I just told you, initial public offering in the history of India. And this LIC's IPO has pushed the race for creation of new demat accounts. So people are just creating demat accounts to sort of have their luck in getting the a bit of the IPO in their demat account. Now, for almost 2 years, India has managed itself for a gigantic task, that is readying the India's premium insurer, which is LIC, with nearly $500 billion in assets and a valuation estimated as high as $203 billion for what could become its biggest ever stock listing. Some bankers have described the public offering of LIC of India as India's Aramco deal. So, as with what is Aramco? Aramco is a Gulf oil giant. Just recently, as with Aramco's $29.4 billion listing, the world's largest LIC's debut will test the depth of the nation's capital market and global appetite for its state-owned crown jewel. Now, LIC is expected to file its IPO prospectus soon. While LIC is ironing out the finer points before launching the mega IPO, brokers are getting ready to cash in on the huge interest from LIC policyholders. With the pre-launch IPO activity already underway, the LIC IPO is expected to be the biggest IPO in the history of India. The government's decision to create a 10% policyholders quota in the IPO a first of its kind, and the possibility of a discount on the IPO price has pushed several policyholders to open their demat accounts. So suppose if you are an already existing LIC policy holder, then you can contact your LIC office and you can ask them how to apply for an IPO. Of course, you need to apply for a demat account. Then only you can apply for the LIC IPO. But they say that there's a possibility of a discount on the IPO price if you are an existing LIC policy holder. Now, a demat account is a must to invest in any IPO. Brokerages believe that LIC IPO may help them get several new customers, as many first-time capital market investors will be opening their demat accounts just to invest in the IPO. So, what is brokerage companies? Brokerage company is nothing but companies which have a sort of account in SEBI. And so if you want to invest in the stock market, you have to go through a brokerage company. So now there are two types of brokerage companies. One is full-time brokers and part-time discount brokers. So full-time brokers give trading advice, while part-time discount brokers don't give trading advice. So there are many banks which provide all three in one facilities, like HDFC, ICICI Bank. They'll give you a savings account and they will give you a demat account, and so you won't have the headache of creating a demat account with a separate company, with a separate brokerage company. You can have it all three in one for your own convenience. Now, we expect 10 to 30 lakh new demat accounts to be opened just to participate in the LIC IPO. This is what Prakarsh, he's the CEO of a discount broker, which is 5paisa.com. This is what he had to say. Now, however, the final numbers could be the estimates, as Prakash admits that if policy holders are given a discount, then several of them want to apply for the IPO. Now, LIC has over 25 crore policy holders compared to 8 crore existing demat accounts. As several of these will be first-time investors in the stock market, brokers want to simplify the investing process for them. We are making sure our user interface is simple so that these investors can easily open their accounts. Now, penetration of LIC is much more than that of the broking industry. So this will help us to get new customers. We are getting in touch with the policy holders as well as LIC agents. So other investing platforms like Grow is also gearing up for the LIC IPO. We have built our systems to support the additional technicalities, which is the policyholder quota of the IPO. We are seeing a lot of interest across our YouTube and social media channels. Now, LIC has been a household name for long. So you know that right from our parents and grandparents, they always sort of, when you ask them about any life insurance or term insurance, the first name that crops up in their mind is LIC. So LIC has a huge brand value in the insurance market in India, and it is also one of the best. This is according to researchers that it is termed as one of the best insurance companies in the world. Now, that's the brand value of LIC. Now, the insurance company has 61.4% market share of a new business premiums in life insurance space as of December 31, 2021. So they already have a 61.4% market share in the insurance space in India. So you can imagine the kind of power they have in the insurance space in India. So this is 1.59 times the market share of the entire private sector life insurance. So compared to private life insurance players like HDFC, ICICI, all the other banks, and you have a lot more other private insurance players. So LIC agents say policy holders don't want to miss out on such an investment opportunity. Every day we are seeing 200 to 300 PANs getting updated in our client database. We currently service over 45,000 policies. So this is the huge IPO, which is very exciting in terms of Indian investors, and I believe a lot of people will be applying for this IPO, in my opinion. Now, coming to the next piece of news is that, as you know, that budget 2022 is just around the corner. And so, what markets expect from Finance Minister Ms. Nirmala Sitharaman? Now, amid the increasing Omicron variant of coronavirus infections, all eyes are on Nirmala, Madam. Her fourth union budget to be presented on February 1. The disruptions from the pandemic weighted heavily on India's fiscal metrics last year, with the central government's fiscal deficit rising to an all time high of 9.2% of GDP in fiscal year 21. However, the story changed in fiscal year 2022 with a better than expected tax collection. So this is quite an interesting piece of information is that in the fiscal year 2022 that there has been a better sort of tax collection from the public. So government has collected a lot of tax in this fiscal year. Now, subsequently, the deficit this fiscal is likely to be around 6.8% of the GDP. Now, as things look relatively promising from growth perspective, some reduction in pandemic-related spending could be on the cards. Now, besides, tax buoyancy may further allow the government to go for fiscal consolidation this year. That being said, the Indian economy remains fragile and growth volatile. Therefore, markets expect the government to roll out more supportive schemes for agriculture, the rural economy, micro, small, and medium enterprises, and social sectors to provide for income generation. But before we get into the details of the budget wish list, let's understand why the onus of the economic recovery could be solely on the government this time. Against this backdrop, Hemang Jani, he is the broking and distribution at Motilal Oswal Financial Services. He lists two areas that market will eye. VK Vijay Kumar of Geojet Financial Services also says that along with these announcements, the markets will also eye a clear roadmap for fiscal consolidation. Now, he also believes that markets may see a steep rally if there's any announcement by the government that simplifies market participation, provides growth framework, and streamlines capital market activity. Coming to the budget wish list, Himang says that investors want reforms for startups and boost foreign investments in the sector. Overall, markets have pinned hopes on the finance minister to announce a budget that provides consistency in reforms, in pro-growth, and assures financial stability in the country. Now, we hope that the budget is favorable for all sectors in India, and let's hope for a very strong budget coming this February 1st. Now, coming to the next piece of interesting news is that why investors are fleeing Chinese real estate. They are putting their money in India. Investors have been taking refuge from Chinese real estate, debt crisis, in pockets of the broader Asian credit market and cite India among opportunities that are relatively insulated from the historic turmoil. Goldman Sachs has recently adopted a positive stance on Asia high yield bonds. Bank of New York Mellon Corp data indicates South Korea, Indonesia, Singapore, India, Malaysia, and Japan all recorded capital inflows into the corporate debt in 3 months through January 18th, while China experienced outflows. Rising inflation means there will still be losses for broader Asian bonds, as there have been in many parts of the credit markets globally, but they have been much milder. Now, dollar notes of all ratings from Chinese issuers have lost about 3.7% in 2022, even after a rally in recent days for property developer securities sparked by policy support. One recent example of a money manager to have cut exposure to Chinese bonds is BDO Capital and Investment Corp, which sold its holdings of such securities. Both Goldman Sachs and credit sites consider Indian companies very attractive. The US bank recommends high yield renewables, while the latter considers financial firms to be best shielded from the troubles in the world's second largest economy. Still, there are plenty of risks for broader Asian credit market because of demand from investors seeking to diversify. Credit sites said valuations for an Asian credit outside of China have already been driven tighter. Now, if the failures don't get out of control, that may sustain interest in the pockets of the Asian market. But any prolonged crisis would cause an economic slowdown that would have ripple effects across Asia. So Chinese property dollar bonds have rallied in recent sessions thanks to a string of policy steps to ease restrictions on the real estate industry and broader monetary stimulus. So, friends, you can see an interesting pattern is that during the COVID sort of period, is that a lot of investors they have lost sort of confidence in the Chinese regime and Chinese businesses in general. A lot of manufacturers are shifting to India from China. That's point number one. Point number two, as you see that even Chinese real estate is really in doldrums, and a lot of the investors are now looking to Indian markets to park their money. So this is a very good sign for India. And I'm not surprised as to why China would like to engage with India in the borders. There are a lot of reasons for that, which you can understand from now. Now, another piece of interesting news is that in agriculture, Indian government is to promote drone use in agriculture. Now, in a major boost to promote precision farming in India, the Union Ministry of Agriculture and Farmers Welfare has issued guidelines to make drone technology affordable to the stakeholders of this sector. Now, the guidelines of submission on agricultural mechanization, the SMAM, have been amended, which envisages granting up to 100% of the cost of agriculture drone or 10 lakh Indian rupees, whichever is less, as a grant for purchase of drones by the Farm Machinery Training and Testing Institutes, ICAR institutes, Krishi Vigyan Kendras, and state agriculture universities for taking up large-scale demonstrations of this technology on farmer fields. The farmer producer organizations would be eligible to receive a grant up to 75% of the cost of agricultural drone for demonstration on farmers' fields. A contingency expenditure of rupees 6,000 per hectare would be provided to implementing agencies that do not want to purchase drones, but they'll hire drones for demonstrations from custom hiring centers, high-tech hubs, drone manufacturers, and startups. The contingent expenditure to implement agencies that purchase drones for drone demonstrations would be limited to rupees 3,000 per hectare. Now, in order to provide agricultural services through drone application, 40% of the basic cost of drone and its attachment of or rupees 4 lakhs, whichever less, would be available as financial assistance for drone purchase by existing custom hiring centers, which are set up by Cooperative Society of Farmers, FPOs, and rural entrepreneurs. Agricultural graduates establishing custom hiring centers would be eligible to receive 50% of the basic cost of drone and its attachments, or up to rupees 5 lakhs in grant support for drone purchases. While rural entrepreneurs should have passed a Class 10 examination or its equivalent from a recognized board and should have a remote pilot license from the institute specified by the Director General of Civil Aviation or from any authorized remote pilot training organization. The subsidized purchase of agricultural drones for CHC's high-tech hubs will make the technology affordable, resulting in the widespread adoption. This would make drones more accessible to common man in India and will also significantly encourage domestic drone production. So, friends, what do you think of the implementation of drones in Indian agriculture? Do you think it's a plus point? How do you think this will affect agricultural yield in the country? Will it help farmers? Do type in your comments. And this is all the news I have for you today. Thank you.